Hey guys, this is Simon with Trade and Perform Coaching. Let me just do a little bit of this, fix that. Apparently there, Brian now will not mind. He commented that I cut my own head off. And that wasn't attractive. Hair's crazy as usual. And we had a good day. So let's start with the chart and we'll go from there. So let's just go with the basics, right? We gapped up and the initial upside target was the 1970 where there was an open gap. It was just below. I had the open gap in the incorrect place this morning. I originally had it at 1971 and a quarter. I was just tired when I did the zones. I should have had it down at 1968 and change. We obviously opened up immediately, rejected off the open gap, which is very standard. So, hold on one second here. But I think, Brian, that's a function of this. How's that? Okay. So, the rejecting off the open gap, right, is usually a high odds trade anyways. I had it here at 1971. What was keeping me from taking the trade gap? So let's go through the rules real quick. First of all, no trading in the first half hour. What does that save us from? Getting hit on the open drive higher or open drive lower. Surviving that first half hour keeps you from going in the hole early in the day. If you don't have to dig out of a hole, A, you're not defensive. Your mind is relaxed. You can stay open to pulling in the information that the market's trying to feed us, right? But there was another litmus test that we had here. So we knew that we got rejection here. It was before the open, and I had the zone in the wrong place. I actually had, like I said, it was actually up here at I think I had it at 1970 and a quarter initially. And so it appeared like it just missed it. Again, I had it in the wrong place. That was my mistake. I should have had it down here at 1968.50. It rejected right off the open gap, and it rejects from 68.50 to 58.50. So that's a 10-point rotation. Makes perfect sense. Also, I tend not to trade right in front of economic data. And then the other pieces that we were looking for, right, is we wanted to figure out who was in control, buyers or sellers. And it was pretty clear. Here's the close. If you just draw a 50-60 from the close to the current swing high, right, assuming that it doesn't reject right out of the open, you can see that we never even came back for a test of the 50-60. Buyers were in complete control. Now, again, one of the areas where we're pretty much focusing right now is not so much on the zones, even though, as someone pointed out to me, I believe it was Damien who's in the room, pointed out that the zones have actually been working quite well, right? So the zone was at 1976 and a quarter, and then 1979 and 3/4 to 1981 and 3/4. And this red line here denotes where we had to swing short trigger, right? And so just going through really quick on what the 4 entries are for swing short. We get a push up, swing down, trigger 1, 50-60 retrace, entry 2. If there's a zone above, that's entry 3, right? And then and then the push down and the trap below whatever the neckline was prior to the break, that's entry 4. And entry 4 and entry 3 is really where the focus is. Entry 1 and 2 are aggressive. So in this particular trade, I actually took a very aggressive stance, and the reason why I'm pointing this out is because I want to show you how this worked out earlier, because it actually caused a little bit of problems earlier this morning. So we've obviously been having much wider than recent history would suggest ranges, right? So I took the 50-60 retrace here. I really don't remember what my original entry was, but I believe it was around 1964.50. My stop was 1 point above the high. Guys, correct me if I'm wrong on that, those of you that are in the room, but I believe I have that correct in terms of where my entry was, and it promptly got stopped, right? So then the next thing that I'm looking for, I've already taken. The reason why this was painful, right, is obviously I was striving for 5-point scales on the downside, and as you can see, I never even let's see, what was it? What was I running on the first trade? I forget if it was 3-point or 5-point scales. Guys, can you all refresh my memory, please? Or I can go look at my trade log. Either way, I can do that too. There's 3 points. Okay, so I get one 3-point scale, but then it reverses. Obviously, from 64 at 61, I get the 3-point scale. I was only able to get one scale, and the plan was to be able to get 50% off by the 12th point. So I get one scale, I get stopped out on the balance. Now, it's important that we stop there and think about that for a second. One of the things that really trips up traders is trying to be perfect for every market, right? One market, you're like, oh, I should have known to scale every point. For example, just 3 weeks ago, when we got the same trade set up, we were scaling points 1, 2, 3, and 4 and moving stop to break even, right? Yesterday, we were scaling every 5 points, 5 to 10 points, right? And we were able to get the best stretch on the upside was 30 points. It's impossible. You'd have to be godlike in order to know which is the appropriate scale to use, right? So it always leads to disappointment, and then immediately what's going on in your head is you're like, oh man, should I be using 3-point stops? Should I be doing 1, 2, 3, 4, so on and so forth? And I'm really tired, so I'm gonna actually have to go look. We took another so if you watch the market rotation, I was pretty specific here, and what I was shooting for from here was I got to look at where I took my next trade down. I apologize, guys. I am so extremely tired that I'm actually going to have to go back to my trade log real quick to see where I took my trades. Hold on one second here. Let's pause this for a second. So the next short came in at 1973.50, and the stop was 1 point above the swing high. So the short was here, and what we were shooting for were again scales. What did we end up doing? I ended up moving the scale to 1969.50. I believe I was shooting for 1968 1/4, a 4-point scale, and I ended up moving that up to 1969.50. Again, I was shooting for 4 to 5 point scales on the way down, and I only got 1 scale off on this trade. My stop was literally 1 point, so basically right above here. My stop was 1 point above the swing high, and the trade obviously got taken out a second time. Oh, there he goes. I actually put arrows where I took the trade. So the entry was at the bottom of this candle, right? I got 1 scale off. Balance was stopped again. But when we were moving up, remember, we're already up 300 points on the day on the Dow, or close to 300 points, and almost 1,000 points on the upside from yesterday's swing lows, right? So my goal all along was this 1979, 1980. The first target was the open gap. The target above that was 1979 3/4 to 1980 3/4. And I'd already decided that if I'd gotten stopped here, that I would put on half my normal size of my trade, but with a 10-point stop here. So I want to slow down the thought process for a second and go through this with everybody. Okay, so you got to understand there's some frustration going on already. I took a trade here and got stopped. I only got pulled off 1 scale. I put on a trade here and I got 1 scale. And now what's going through your mind, because this is the important part, what's going through my mind at this point is, well, that sucks. You know, if I just done a 1, 2, 3, 4 scale, moved stop to break even, this trade turns totally profitable. For me, that means 2 things. Number 1, I'm profitable, which is always great. But the other thing that it means is that everyone in the room is also profitable, and I get another feather in my cap. And if you're going to do something like this where you're talking to a bunch of people and trading at the same time, yeah, your ego is constantly crying out for you better be right, right? It's just a constant battle in my head, okay? And at any rate, the first thing you're thinking is I'm pushing up here, right? Is here we go again. So if you look, I take the trade at 1979 3/4, right? And immediately it rolls back down to 1976. Now here I am again. I'm thinking, well, you know, if I just take 1, 2, 3, 4 on my trades, man, that is crazy. Look at the rebound, guys. Wow. And yeah, a swing long did trigger. I guess I should have mentioned it. It triggered at 2 bars ago, right here. We had a swing long trigger, guys, but I wasn't paying attention. I apologize. I was still celebrating the other trade. So there we go. At any rate, I guess that would have capped off my day even more so, but that's okay. So, okay, but I can't express how important this is, and also the feedback that I got from people in the room. Hold on one second. Let me read that. First trade, 63.50. Thank you, Robert. So, you know, I'm sitting there thinking, you know, I took 79 3/4. I just do 1, 2, 3. Again, I've got a profitable trade, and instead of having 2 stops on the majority of the trade back to back, even though they were on smaller size, you're really feeling the pressure on my end, and I know the individual traders have to be feeling the pressure. And that's when I go back to my trade plan and I go, dude, the trade plan either works or it doesn't work, one of the two. But what I know is a certain failure is if I constantly judge the market based purely on what I feel about the market. I will always, how the market works when I feel about the market? I want to buy here, I want to buy here, and I want to buy here. And I want to sell here, and I want to sell here. Now, on a day like today where it's ripping around, that works. But the majority of the time, traders get bone crushed. Well, how that ends up working is you buy here and you stop here. You buy here, you stop here, you buy here, you stop here. That's how it usually works. Believe me, I was a master of that trade a long, long time ago, and was one of the motivators to get me to change my trading style way back in 2000 was the massive swings I would take in P&L. And I learned what I feel simply has zero relevance to the market. What I think the market should do has zero relevance. My opinion matters not at all. But my format and my structure are very, very valuable. So keeping on with that idea and concept, I said I was going to take 1979 3/4 even if I got stopped. I basically got stopped, I believe, at 78, and I re-entered the short and increased the size. This trade was done on 1/3 size. This trade was on half size, which with a 10-point stop, if I had gotten stopped, would have banged me right up against my maximum stop for the day, which is roughly 8 ES points on full-size trade. Okay, so the next question that comes in that's very natural, 10 points from here, right? So you got to remember everyone always looks at a trade in reverse and goes, well, it's so easy, right? Of course a 10-point trade a 10-point stop makes sense there, right? Or why didn't you just, or you could always look at it another way. Well, Simon, if you just took the zone here and you took the zone here, you got paid anyways, right? The point behind that is this swing trade is still in effect, and if you take the larger picture, right, this is 1985. Look where we were yesterday morning, right? This is yesterday mid-morning. We're at 1875. That's 100 points away. That's 100 handles. I mean, that's freaking huge, right? If you can't be brave up here, then you can't get this. And then I'm going to pull through my scales here, right? And I'm going to go through exactly what I tweeted out. Hold on one second here. So this way I don't even have to guess. We're just going to go right through the series. And I'm going to explain how, and what I want to show here is the discomfort I had on my trades, right? So if you look, okay. So if you look, so you can see the discomfort that I'm writing. Let's see. Okay, stopped on 3/4 of the prior trade, and now short half size, 1979 3/4. And I put an emphasis. It's a 10-point stop. By my calculation, that was the stop that's been necessary in this market to stay in my highest odds trades. Okay, some of them have been smaller, but for the most part, it's been 10 points. So if we continue with this thought process, right, and I put, if I'm stopped here, I'll be done for the day. Scales every 5 points on the first half of the trade. So I'll scale that over the next 15 points. And then I laid out exactly what the scales were, right? And so then if you look, and I put, obviously, this is the no fun part of this trade. The signal fails on straight up and straight down markets, stops in place, but we have killed them for 3 weeks. Only right if they hit back every now and then. If I'm stopped, I'm done for the day. So I want you to go through the mentality in my head. Not only do I have people in the room watching literally everything that I'm doing, I have the own pressure of having my own P&L go up and down, right, in my own account. And I know, even though I tell people not to coattail me, right, to take your own trade, manage your own risk, I know some people are going to coattail me. It's just part of the deal of having a room, right? So what I'm typing here is that, hey, guys, I'm really freaking uncomfortable. Well, where did I type this? This was 2 hours ago. This is when we're sitting right up here at 1985, right? Right now it's 235. So if we go 2 hours ago, that was 1235, right in here, right at the highs. And what do I want to do there? I want to cover the trade, guys. That's what I want to do. As a matter of fact, as soon as it comes back to break even right here, I'm like, thank you, Lord. Let me get out of this thing. This thing is unbelievably painful, right? I have my biggest trade size on of the day. I have people following me. And the easiest thing for me to do is say, hey, break even, let me get the hell out of the trade. That's not what I said. And the reason why is because I went back to my trade plan. And my trade plan saved my backside today, okay? Because what if I look like a schmuck if I covered this trade right here for break even and watch it roll over from 1979 all the way down to 1945, right? Which is where I got very lucky, and I just hit the market button is all it was, right in here, and covered the trade. I didn't know anything more than that. I just covered the trade right there. Okay, so what was going through my mind? So I'm sitting here, and just right after that, I put, I'm still uncomfortable, right? This is 2 hours ago. Still out of the office, like everyone. I hate getting stopped, but discomfort part of the deal on the road to getting paid. Now, this is 2 hours ago. I had no clue that the market was going to roll over 35 points. I could not have known that. All I know is that we were very extended and that my swing short indicator was telling me swing short, right? And then finally I put in staying to the plan. If you noticed, over an hour passes from the time I'm feeling uncomfortable, I leave for lunch, I don't even want to see my screen, right? And then I go, boom, my first scale hits 1974 3/4. So let's follow this down. I don't freak out. 1974 3/4 comes right here. First scale as planned. 1969.75 follows as planned. Coming on down, I get a little cocky with the Trump comment. And then 1959.75 hits next. I move my stops to break even on the second scale. And then I put my next scale up to 1961. We were having a little trouble getting down to 1959. And I had a support resistance zone there that was respected earlier. So I moved the next scale to 1961. That was plus 18.25. Scale 1955. That was plus 24. And then what I said, I only have a few cards left and I'm done for the day. It took a lot of energy to stay in. And then I covered the options. I'm not going to go through that. And then finally, I wasn't even planning on it, right? And then 1945.25 hit. I just covered, and I didn't even know what price I was going to get. I just put closing position now. I got 1945.25 plus 35-ish points, and I called my covered my calls. Okay, the reason why I've stepped through that whole process step by step is one lesson and one lesson only was learned that was very, very important today, and that was this. Okay, I wanted out of this trade for this entire period of time. I felt like an idiot for being in the trade. Okay, yes, I was following my trade plan. I was doing exactly what it called to do. I was doing the very thing that was logical and made sense. But if you do not follow a written trade plan, your emotions will overwhelm you in this area. And if you don't follow a trade plan coming down, your emotions will overwhelm you, right? So my trade plan for today called for 4 to 5 point scales, okay, and to let my trailers run. And that's the lesson from today, guys. It's not even where the swing kicked in or where the swing long kicked in. And then the other part of that is this that's very, very important. I'm tired, right? It's been a great 3 weeks, and I have kicked ass this week. I annihilated it this week. I don't think I could do better if I tried, but I didn't do anything. All I did was have an absolute commitment to following my trade plan. I think I've had 2 stops or 3 stops this week total, two today and 1 I think yesterday, right? But my biggest trades this week, yesterday I had a 30-point trade. Today I had a 35-point trade. All week long we've been annihilating it, right? But as soon as the market, even when you're confident and you're making money, as soon as the market starts going into a pattern where you start thinking, uh-oh, maybe I need to go off plan. And I was so tired today that it would have been easy to slip into emotions. And my emotions all said, get the hell out of the trade. And they would have all betrayed me. Each and every one of them would have betrayed me. So, anyways, that's a trade review for today. Any questions, guys? Anyone in the room? Going once, going twice, going 3 times. It was a great week. I'm taking tomorrow off. I've had enough. This has been a fantastic market. I see now that I could have caught the swing to the upside. Well, I never even got really a retrace. I doubt I would have gotten an entry here. I got very, very lucky this week and very blessed. Really grateful for everyone in the room who did well and stuck with the trade plan and made money. And I bow to y'all. That's really freaking awesome to see y'all get paid. And I feel very honored to be able to help y'all get to a point where you can get profitable. You're welcome, Simon. Was the stop up at approximately? The entry was 79. So let me erase this and go through it. Wrong tool. Hold on a second here. Huh, that's interesting. Let's try this again. There we go. So Tom's asking me where the stop was on the trade. The entry was right here. Let's correct that. Entry was right here. Okay. Stop was 10 points behind, so that would have put the stop at. We'll move this down a little bit. I have too many toys moving at one time. There we go. Okay, so let's try this one more time, Tom. This was the entry right here. The stop would have been right here. 10 points. 10 highly uncomfortable points, right? And so that's how the trade worked. The only way to handle that, I had to cut trade size down, right? Half size, that would have been a 5-point stop, which is 1 point beyond what my normal risk tolerance is on a full-size trade. But if I didn't do it, there's no way I would have stayed in. I had to adjust it to stay in emotionally on the trade. Thank you, Robert. You have a great weekend, too. I take it you got paid? Let me see if anyone else hitting me with a question. You're welcome, Randy. Okay, Jason, have a good one. Nice. Excellent, Robert. Good job. Okay, guys, we're done. Let me kill this. I hope everyone traded well. This is crazy, man. This is a hard... Look at that. That is just... Look at the move back up. It's just freaking... That is amazing. 47. Let's see this. This is 85 to 43 to 78. Man, do not take a misstep in this market, guys. You will get bone crushed, okay? And markets have a hard time closing on the low. Please keep that in mind. Yeah, monster up, monster down is pretty awesome, right? Let's hope this stays this way for the rest of the year. I'll be dancing and doing all kinds of crazy things. It'll be nice. Mostly I'm tired. I'm out tomorrow. I'll see everybody on Monday, guys. Thank y'all.